This past week, a major Supreme Court decision sent a jolt through the tech sector, lifting shares of companies that rely on digital advertising. Alphabet was one of the biggest beneficiaries, seeing its stock jump after weeks of trending down. But with the company planning to spend nearly $200 billion in capital expenditures this year, is this a real breakout or just a temporary relief rally? Welcome to TickerWatch News for Alphabet, Week 8, 2026. This is the weekly podcast that breaks down the essential news and developments for Alphabet. It was a volatile week for Alphabet. After trending down for most of the month, the stock surged late in the week, climbing around 4% on Friday alone. That brought its performance for the year back to roughly flat. The rally came alongside a broader market updraft as the S&P 500 and Nasdaq also jumped following a key court ruling. The move saw Alphabet stock climb back over the $314 mark, bouncing off of what technical analysts were viewing as a key support zone. The biggest story driving Alphabet this week was a Supreme Court ruling that struck down most of the tariffs imposed by the previous presidential administration. The news lifted stocks across the digital advertising sector. The thinking is that companies expecting tariff refunds could channel that extra cash into higher ad spending. As a leader in digital ads, Alphabet and its stock were seen as direct beneficiaries. On the product front, the company continued its major push into artificial intelligence. The company rolled out Gemini 3.1 Pro, an update to its flagship AI model that it says more than doubles the reasoning performance of the prior version. Alphabet also announced a series of new AI partnerships. It's teaming up with Southeast Asian tech company Sea to build an agentic AI shopping prototype for its e-commerce platform, Shopee. It's also partnered with Zillow to bring home buying guidance into its Notebook LM tool, and is working with retailers Loblaw and Unilever to integrate AI into their customer experiences. Reinforcing its global AI ambitions, Alphabet detailed a $15 billion plan to boost AI development in India. The America-India Connect initiative includes a new AI infrastructure hub and new subsea fiber optic routes to enhance network speed and reliability between India, the US, and other parts of the world. It wasn't all positive news, however. The company is facing a serious legal challenge after federal prosecutors unsealed a 14-count indictment against two former Google engineers. The indictment alleges they conspired to steal trade secrets related to the company's Tensor processor, which is used in its Pixel phones. The market reaction to the week's news was largely positive, but investor sentiment remains complex. On one hand, there's clear optimism around Alphabet's AI progress. Canaccord Genuity raised its price target to $415, maintaining a buy rating. The consensus among most analysts remains a strong buy. On the other hand, there are persistent concerns about the immense cost of the AI arms race. Alphabet confirmed it could spend between $175 and $185 billion in capital expenditures in 2026. Highlighting these massive funding needs, the company also issued a 100-year bond, a financial instrument not seen from a major tech company since 1997. While analysts at UBS see this spending driving up to $23 billion in new cloud revenue by 2027, they also noted it's hurting overall profitability, leading them to maintain a neutral rating on the stock. Institutional investors are also sending mixed signals. Filings revealed that Paul Tudor Jones's fund took a significant new position in the company's stock, while George Soros's fund trimmed its stake. From a technical perspective, Alphabet's stock chart is at a critical juncture. Before Friday's rally, the stock had been trading in what's known as a bearish flag pattern. The recent surge, which started from a support zone between $296 and $300, is now challenging that bearish structure. For the upward trend to continue, the stock will need to break through a key resistance level in the $327 to $330 range. Fundamentally, the story for Alphabet is a battle between two powerful forces: the promise of AI-driven growth and the staggering cost of the required infrastructure. The company's valuation is considered to be at a premium compared to its peers. The core debate is whether the massive investments in AI, from data centers to partnerships, will generate a strong enough return to justify the impact on near-term profitability and free cash flow. Looking ahead next week, the main focus will be on whether Alphabet's stock can build on its recent momentum. Breaking and holding above the $330 resistance level would be a strong bullish signal. Conversely, a fall back below 304 could indicate the rally is fading. The bull case for the company is that its AI initiatives, like the new partnerships with Shopee and other retailers, will begin to show a clear path to new revenue, validating the massive spending. The bear case is that the high capital expenditures will continue to weigh on the stock, while legal headwinds, such as the trade secrets case and intense competition from other AI labs, create further pressure. The most likely scenario is that the stock will continue to be a battleground, with market sentiment shifting between optimism over AI's potential and anxiety over its cost. Thank you for tuning in to this week's episode. This podcast is for educational and informational purposes only and does not constitute financial advice. Please be sure to subscribe, leave a review, and share this episode with others who are following the story of Alphabet.